The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Well, good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. Number to use to talk to me is 877-927-6648, 877-927-6648. My show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. I'm on Channel 1 in Tiger TV on the homepage of TFNN.com. You're watching on your PC on Channel 1 in Tiger TV. You can look at the charts that I'm talking about right along with me. My show is also archived there after the show is completed on Channel 13. You can also get my show anytime on iTunes. And another way to listen to all TFNN programming 24/7 is with your smartphone. Just type in tfnn.mobi and you can listen to the stream that way as well. I currently own 13 stocks in my Ultimate Growth Stocks model portfolio. I sold a holding earlier today for a gain. Yeah, let's face it, this market is sketchy right now. I think the risk probably outweighs the reward, looking at the price and volume action in the major averages on Monday, Tuesday, Wednesday, and Thursday. A lot of uncertainty out there. So I sold a stock today, but I still own 13 that are holding above support levels, and so far so good there. My newsletter publishes once a week, every Tuesday, with email buy and sell alerts in between. And just wanted to remind everyone that I have a webinar, upcoming webinar, my first at TFNN. That's coming up Thursday, July 21st. It's going to be at 7 p.m. Eastern, and it's going to be called How Sales and Earnings Power and Fuel Price Performance. And that's a critical thing that I look at for any stock that I want to buy for my Ultimate Growth Stocks newsletter and model portfolio. I want to make sure there's earnings power there that's going to drive price performance going forward. So we're going to talk about some stocks that I've bought and sold recently for profits, why I bought them, when I bought them, and so it's going to be a great webinar Thursday, July 21st at 7 p.m. It's really going to be a way for me to, introduce myself further to you, and people can get familiar with how I approach the market and what goes into my decision to buy stocks. And certainly one of the key things I look at is powerful earnings and sales growth. I think that's really one of the ultimate drivers of a stock's price. And of course, I also look at institutional sponsorship. I want to make sure there's some good, solid performing mutual funds out there that own shares of a stock that I'm considering. But the webinar on Thursday, July 21st, is going to be about how sales and earnings power and fuel price performance. So I hope you'll be able to join me. You can register right on the homepage of TFNN.com. In terms of my model portfolio right now, it's really kind of capital preservation mode at this time. I'm starting to think that the risk probably outweighs the reward here. I've had several stocks working for me. Some are starting to come in a little bit. Again, holding on to holding above support levels, and still several profitable trades, but really not in a position now where I feel like actively committing capital in this market. I just think that the headlines are too negative out there right now. It's a pretty serious headwind for the market. Let's take a look and see where we're at with about 50 minutes left to go in Thursday's session. Things are, getting worse as the day wears on. Stocks are at session lows right now. The Dow is down 62 points, make it 58 points, 0.5% to 12,433. The Nasdaq underperforming broadly today, down 38 points, 1.4% to 2758. And the S&P 500, I have that chart up right now in Tiger TV. That's down close to 10 points, 0.7% to 1307. You can see the S&P 500. I'll go ahead and just update this chart real quick, and See, the S&P now is down underneath its 50-day moving average. It looked like it was going to find support at this support level yesterday, but you can see it closed all the way down near its session low. What we have taking shape in this market right now, which is a bit disturbing, is that you had a higher volume decline for the S&P 500 on Monday. You had another higher volume decline on Tuesday. You had a reversal in lower volume on Wednesday, and now it looks like we're going to have another heavier volume decline for the S&P 500 today. Volume on the New York Stock Exchange has been tracking higher than Wednesday for most of the day. So it looks like we could have 3 higher volume declines for the S&P 500 in the past 4 trading sessions. That does not indicate rampant institutional selling, but it is a sign of weakness, and it is worth paying attention to. And it's why I'm starting to play defense right now with, again, my Ultimate Growth Stocks model portfolio. Let's take a look at the chart of the Nasdaq that I have stored in here. We'll see where the Nasdaq's at. Nasdaq's down 1.3% to 2760. It's right at its 50-day moving average right now. So the Nasdaq has been holding above the 50-day moving average for all of this week. It's really right at that inflection point right now. The 50-day line is at 2758 thereabouts. Nasdaq currently trading around 2760. So we'll see how the session ends up today, but not a good day at all shaping up for stocks. In some headlines today, apparently Democrats and Republicans have agreed on $1.5 trillion in spending cuts, a step in the right direction when it comes to raising the debt ceiling by the August 2nd deadline, but there are still other issues to work out there. You would think a headline like this, where progress seems to be being made, would help the market, but that is not the case, as we are near session lows, and again, it looks like another higher volume decline taking shape today, not only for the S&P 500 but for the Nasdaq as well. Nasdaq volume today had been tracking lower than Wednesday for a better part of the session, but it looks like it's picking up the pace as we head into the close. So again, progress is being made on the debt ceiling talks, but it's not helping the market any, and that's cause for concern as well. Taking a look at gold today, August gold gained $3.80. Let's see, that's only 0.2% to finish at $1,589.30 an ounce. That's on the COMEX division of the New York Mercantile Exchange. Take a look at the GLD, the Spider Gold Trust, and we'll see that is trading close to up 0.3% to 154.54. You can see it's working on several gains in a row. You know, while we haven't seen volume on the Nasdaq or the New York Stock Exchange or for individual stocks for quite some time, there has been some pretty good volume in the GLD in recent days. We have now 1, 2, 3, 4, 5, 6, 7. This is almost 8. Looks like 8 days in a row up for the GLD. You can see it cleared a resistance level right here, around 152 and a quarter, thereabouts, but technically looks very strong, and gold continues to find a bid. Haven't talked much about silver, but silver has started to catch a bid again. We'll take a look at the iShares Silver Trust, and that is outperforming gold today, up 0.8% to 37.52. You can see it recently climbed back above its 50-day moving average. The SLV did, but it is trading near its session low. The SLV hit an intraday high of 38.37, currently trading around 37.52. Oil down 2.4% to $95.69 a barrel. Quite a bit of economic data earlier today that I actually thought was pretty good. We had a good reading in weekly jobless claims. They fell more than expected to 405,000. Of course, everybody's waiting for claims to consistently fall below the 400,000 level. Hopefully we'll see that in coming weeks. June retail sales, pretty good, up 0.1% in June versus expectations of a decline of minus 0.2%, so that was better than expected. Excluding autos, sales were flat from a year ago, and that was in line with expectations. So certainly no worrisome numbers in June retail sales. I wanted to take a look at a retail ETF that I wrote about earlier today for ETF profits over at the Street, and that is the RTH. It's probably the most liquid retail ETF out there, the retail holders, that's run by Merrill Lynch. And technically, you know, this ETF, I don't talk about ETFs very much on this show, but when I see ETFs and technically compelling setups, you know, why not talk about them? So the RTH was recently down about 0.5% to 110.56, but this is in a good consolidation here. And you know, even though the market there are several yellow flags out there, and maybe even some red flags at this point. But if stocks were to get a flurry of positive headlines sooner rather than later, this is an ETF that I still think could work, and you could ultimately get a breakout over 113.56. But it is under a little bit of pressure today, along with the broad market recently trading around 110.33, so it's still about 3 points away from a possible swing point. But RTH is filled with a lot of large cap retailers. Walmart is the top holding with a weighting of close to 18%. Home Depot is next, then you have Amazon after that, and Walgreens. So the RTH, the retail holders ETF, looks pretty good technically. Other economic data today. As we head into the break here, producer price index, latest reading on wholesale prices, they fell 0.4% versus expectations of a decline of minus 0.2%. So prices fell a little more expected overall. Core rate edged a little higher than expected, up 0.3%. The estimate, I believe, was for an increase of 0.2%. So you know, another mild reading on inflation. Don't forget, tomorrow we have the latest reading on consumer prices, and also the latest reading from the University of Michigan Consumer Sentiment Index. And remember, my show on Tuesday, we talked about the Investors Business Daily Tip Economic Optimism Index. That fell sharply for the month of July. So it'll be interesting to see what the University of Michigan has to say on Friday regarding consumer sentiment. Take a look at some earnings report today. Let's go ahead and take a look at Jpmorgan Chase. You know, the numbers really did not look bad. In fact, they were better than expected. But again, when you're talking about a technically damaged stock like Jpmorgan Chase, I mean, it normally takes you know, quite a bit of time for technical damage like this to repair. Shares were outperforming today, definitely. They're up about 2.25% to 40.51, off the intraday high of 41.24. In fact, it's trading near its session low, but again, just following the broad market lower. But the numbers at Jpmorgan were better than expected. Earnings growth year over year rose 0.3% to $1.27 a share, with sales up 9% to $30.6 billion. And we also had a nice earnings report from Yum Brands. That's ticker YUM on the New York Stock Exchange. You know, Yum Brands is really focusing more of its attention in China now than it is the U.S. I mean, sales of its Taco Bell units in the U.S. have been struggling, but growth in China has been very, very solid. I think same-store sales in the quarter rose 18% from the same time a year ago. Earnings up 14% to 66 cents a share. Sales up 9% to $2.8 billion. That stock is up 1.6% today to 56.47, and as you can see, holding above its 50-day moving average. So good day for Yum Brands. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG. TFNN and Tom O'Brien have announced a one-of-a-kind special for this month only. During July, if you purchase at least $500 worth of Tiger Dollars, not only do you get a 20% bonus, but you also gain access to an exclusive one-day online class with Tom O'Brien. Tom's live one-day webinar will take place Monday, August 8th, and of course will be archived if you can't attend or just want to review. Tom will focus on the 5 primary fundamental core techniques to become a master trader, and the only way to gain entry to this exciting one-day class is by purchasing your Tiger Dollars in the month of July. The best part about Tiger Dollars is you can spend them on a variety of newsletters and products we offer. Bud, Basil, Ken, Dave, Steve, Larry, Tom, or Nico, no matter your preference, they all accept Tiger Dollars for their services. Purchase your Tiger Dollars this month and don't miss out on Tom's exclusive full-day webinar. Visit TFNN.com and act today.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Before we went to break, we were talking about earnings from Jpmorgan Chase and Yum Brands. Both stocks are outperforming today. So, by and large, the earnings reports have been pretty good. We're going to talk about Google's earnings a little bit later. They're going to be reporting after the close. And then starting next week and the following week, boy, it's just going to be an avalanche of earnings reports. Hopefully the news is going to be pretty good. But, bottom line is that the negative headlines in this market are just are a formidable headwind at this point, and it's a difficult environment for good stocks to make headway. It's a difficult environment for just about any type of stock to make headway. So that's one thing I pay attention to when I'm managing a model portfolio and writing my newsletter. I like to swim with the market tide as much as possible. I don't try to force the issue and make money in a market that is where several yellow flags and again maybe even some red flags have been raised. At this point, with the weak action in the market that we've seen now for 4 days in a row, I guess the bottom line is just the risk seems to outweigh the reward. I mean, it's really tough to buy stocks with conviction at this point. That said, you don't have to run for the sidelines if you've got profits in stocks and they're holding above support levels. Again, wait for the market to tell you to sell, take profits, or do what you have to do. But if you have stocks that are holding support, they're declining in light volume, and the technical picture still look pretty good, there's no reason to panic and sell everything. So good earnings today from Jpmorgan Chase and Yum Brands. I also want to take a look at Marriott International, well-known brand, ticker MAR on the New York Stock Exchange. News not very good here. Stock is down about 6.5% today to $34.74. Late Wednesday, the company reported a 19% rise in quarterly profit, which was mostly in line with expectations, but investors, I should say, didn't like a downwardly revised room rate outlook. So taking a look at a daily chart of Marriott, you see, laggard stocks, most stocks in my growth screens are going to have the 50-day moving average trending, well above the 200-day moving average because they're strong price performers. Marriott has been a sluggish price performer for so long, its 200-day line is actually above its 50-day moving average. The 200-day moving average has been a pretty key resistance level for Marriott for several weeks now, and that's noteworthy as well. When a support level goes from support to resistance, it's usually a sign of a weak stock. So Marriott, investors selling shares of Marriott today down 6.5% or so to $34.74. Other headlines in the market today. Thought this would have helped the market some. The Italian Senate approved a $99 billion austerity package, similar to what Greece did. I think it was just last week. Italy is the Eurozone's third largest economy, and concern has been mounting there that it will be swept into the sovereign debt crisis. And again, Italy's economy is much bigger than Greece's at this point, but it's hard to say what the market is focused on now. It's just a weak day for stocks. Maybe it's in anticipation of some weak earnings reports coming up. Maybe it's maybe right now it's only about the debt ceiling debate that's going on in Washington now. But news out of Italy today didn't do much to help the market. Remember, Fed Chairman Ben Bernanke was in front of the House Financial Services Committee yesterday. He also testified today. A lot of the headlines today blaming the weakness. We had early strength and now weakness late in the day. Some headlines saying that Ben Bernanke backpedaled from his statement yesterday about QE3. Ben Bernanke's been very clear. Let's call a spade here. He's been very clear that QE3 is not on the table now. It's a possibility, but he does not feel, he and the Federal Open Market Committee do not feel it's necessary to launch another round of stimulus to help this economy. So I don't know what those headlines are talking about today. He basically reiterated what he's been saying the whole time. They're not ready to launch stimulus. And if they need to at some point in the future, they will do it. Bernanke warned Congress today that deep spending cuts could derail an already fragile economic recovery, and he also said a U.S. debt default, not surprisingly, could wreak financial havoc. Let's take a look at ConocoPhillips, COP. Interesting news out of that company today, ticker COP on the New York Stock Exchange. Shares are up a little more than 1.5%, but you can see another example of a stock that was really strong earlier in the day. Shares hit an intraday high of 80.13. Now it's trading all the way down to 75.63. News today, a company's going to split into two separate publicly traded companies. Conoco's board approved separating its refining and marketing and exploration and production businesses by spinning off the refining and marketing segment to shareholders in a tax-free transaction. After early strength, ConocoPhillips again down to 75.63. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Now we have our winner, William Lorman from Wilmington, Mass. William, thank you so much. Congratulations.
Hi, Tom. Thank you very much.
It's a beautiful thing, man.
Oh, we've got Jason Spears. Congratulations. You are the winner of the Great Panther Silver Giveaway here at TFNN. I'm so pleased you called in. Made my day.
Well, thank you. Thank you very much.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Right now, we have our winner, Joe Picararo from Wakefield, Mass. Congratulations.
Oh, yeah. Hey, long-term fan. Listened a long time. So, yeah, big fan.
I know that voice, man. That's a beautiful thing. That's a beautiful thing, man.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. Purchase Tiger Dollars in the month of July. Order Ultimate Growth Stocks and receive access to Tom O'Brien's exclusive one-day live webinar. 5 primary core techniques to become a master trader.
Welcome back, folks. Ken Shreve with you. Welcome back to Breakout Investing. Had a question from a colleague of mine at TFNN.com, David White, wanted to know about this the consumer confidence survey coming up tomorrow from the University of Michigan, and if there's any correlation to what University of Michigan says to what the Investors Business Daily TIP Economic Optimism Index says. And right at the top of the IBD press release earlier this week on Tuesday, which again was the first reading on consumer confidence for the month of July. It says that the IBD index has a good track record of foreshadowing what the University of Michigan and also the Conference Board have to say in their sentiment indexes. So I don't have specific data for you, but since the inception of the index, and it's been running for several years now, it does have a pretty good track record of foreshadowing what the University of Michigan has to say. So we'll see. I think the consensus estimate, David, for the University of Michigan index tomorrow is for it to be mostly unchanged. It might tick slightly lower, but it was a pretty big drop in the IBD index earlier this week in consumer confidence. So we'll see what it has to say. There were some, I should say, some good gainers during the day today on Thursday. So rather than talk about the decliners and be entirely negative, let's talk about some good things happening on Wall Street Thursday. Take a look at Ultratech. Shares are up 9% today to 27.12. You see a nice bounce off its 200-day moving average. Fundamentals actually are very, very strong at this company. It does have quite a few positive qualities. Obviously, this is a chip equipment company, and semiconductor stocks have been under quite a bit of pressure. But in 2010, Ultratech made 67 cents a share. They're expected to post full-year profit this year of $1.51. That's 125% increase from 2010, and then next year they're expected to earn $2.16. So this is a company, very interesting technology. What they do is they basically make photolithography and laser thermal processing equipment for semiconductor device manufacturers, and again, it does have a pretty good track record of growth, but that doesn't diminish the fact that this is a technically damaged stock. It is having a good day today, again up 9% to 27.12, support at the 200-day moving average, but for somebody with the methodology that I follow when looking at growth stocks, I like to see much better relative price performance than what this stock is showing. So if it starts to climb higher and recently, eventually moves above its 50-day moving average, which is at 30 at this point. Again, the stock is still at 27. It could go on to form a base and attempt a breakout, but that's probably still a long ways away. Ultratech is scheduled to report earnings on July 21st. Earnings expected to be up 133% from a year ago, with sales up 65% to $52.1 million. So it is a fairly small company, market cap of $700 million, but the stock is having a good day today. Also wanted to take a look at Jazz Pharmaceuticals. This is a much different company. I would consider a much higher quality company. Let's take a look at JAZZ on the Nasdaq. Jazz Pharmaceuticals shares were recently trading up around 5.5% or so to 36.89. Good solid breakout today. You can take a look at the daily chart with me here on Tiger TV. Jazz Pharmaceutical is a company. They make drugs to treat narcolepsy, obsessive compulsive, and social anxiety disorders. Really good growth prospects at this company as well. And you can see, I mean, it's a stock that's working today. You got good volume behind a breakout today over 36.47. Remember, I typically don't like to chase a stock when it breaks out over a swing point. I don't like to buy it when it's more than 4 to 5% past that swing point. But real solid day for Jazz Pharmaceuticals. Good solid breakout. There's several other gainers today that we'll talk about when we come back. Don't forget, check out a trial to Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. Click on the newsletters tab and then investment newsletters, and you can get a trial that way. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to TFNN.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here,
right now.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Ken Shreve with you, checking on the markets here with about 20 minutes left to go in Thursday's session. We're, doing a little bit better. The Dow is now down close to 35 points, 0.3% to 12,457. Nasdaq still underperforming, down 28 points, 1% to 2768, and the S&P 500 down a little over 6 points, 0.5% to 1311. So stocks trying to finish off their lows, but not a great day for the market. I mentioned earlier in the show that if volume stays where it's at, we could end up having a third session out of 4 where indices have closed lower in higher volume, where volume has picked up from the prior sessions. So that would be called mild distribution, and it is something to pay attention to when you're gauging underlying market health. And since I use a top-down approach with my model portfolio, where I really try to focus my buys when the market is trending higher, right now certainly the uptrend is a bit in question with the S&P 500 falling below its 50-day moving average, and the Nasdaq right at that support level. Before we went to break, we were talking about Jazz Pharmaceuticals, and what I would say about Jazz Pharmaceuticals is this is a stock that has a lot of qualities that I like to see. And I talked about my webinar that's coming up on Thursday, July 21st. You can register. It's a free webinar. It's going to be at 7 p.m. Eastern. We're just talk about how earnings and sales growth drives price performance. And again, I mentioned that Jazz is going to be coming out with earnings on July 28th. I may not have mentioned that, but they are reporting earnings on July 28th. Earnings are expected to be up 164% year over year to 74 cents a share, with sales up 49% to $64.5 million. Interesting, a company like Jazz Pharmaceuticals, it sells at 29 times trailing earnings and only 7 times forward earnings. And this is a company where growth prospects are very bright. They earned $1.55 a share in 2010. They're expected to earn $3.02 a share this year in 2011. That's up 95% from 2010. And in 2012, they're expected to earn $4.07, and again compared to $3.02 in 2011. So you can see there's very strong growth prospects at this company. Good solid breakout today in heavy volume. Also wanted to take a look at another healthcare name, Perrigo. This is a stock that I've owned off and on in my model portfolio. I do not own it at this time, but again, a company with characteristics I like to see. Perrigo recently trading. Let's see, Perrigo is recently trading around 92.86, up close to 1%. We'll pull up a chart of Perrigo here and see what it's doing. This is a week chart, and what you have with Perrigo, again, is another good technical setup. You can see a recent breakout over $92.30. Remember, I don't like to chase stocks more than 4 or 5% past a swing point. Well, Perrigo right now is trading at 92.60, so it's right at that swing point. Pretty decent volume. I mean, this is a well-supported stock, high-quality company with good growth prospects. No earnings date yet, but for the current quarter, profit is seen rising 39% year over year to 99 cents a share, with sales up 14% to just over $700 million. Perrigo is a maker of over-the-counter and generic pharmaceuticals. Another stock that's outperforming today that looks pretty good. And let's also take a look at Alliance Data Systems. This is an interesting company as well, ticker ADS. Alliance Data Systems. Again, this is a company that provides transaction credit and marketing services to the retail industry. Stock was doing well earlier in the session. Shares recently trading up 0.4% or so to 95.80. But another interesting technical setup here. This is a breakout candidate. You can see a swing point of 98.59. Shares still a little bit a ways from that swing point at 95.31, but a good technical structure here. A stock is getting pulled down a little bit with the broad market today, but another high-quality company with good fundamentals. Fundamentals matter very much to me. I want to see a good track record of earnings and sales growth, and Alliance Data Systems has it. They're going to be coming out with earnings on July 21st. Earnings expected to be up 21% to $1.67 a share, with sales up 8% to $721.4 million. Moving on to Phillips Van Heusen, that's PVH. These are stocks that I just came across today that I think look interesting. Phillips Van Heusen, they make shirts, dress shirts, things of that nature. Another positive technical setup in this market. Then again, I've been talking about this in recent weeks. Well, there's a lot of nervous Nellies out there, and a lot of people negative on this market. And believe me, I understand that yellow flags are out there, and market action, especially this week, is starting to look very suspicious. Would it surprise me to see the market up 200 points tomorrow, or 200 points next week? It would not surprise me at all. It also wouldn't surprise me to see the market down 200 points. That's the problem. Trying to get a feel for direction is very difficult, especially when you don't have a lot of volume. Even though we've seen higher volume behind recent declines, it's still mostly been below average. So it's just kind of tough to discern market direction right now. But Phillips Van Heusen recently trading up close to 2% to 71.69. No news today, but a nice chart. You can see another stock that's flirting with a breakout. It actually is slightly past a swing point now of 71.81, trading around 73.26. So this is still within buying range. It's not a stock that's overly extended. The train hasn't left the station yet. Certainly not like buying a stock like Green Mountain Coffee Roasters or Fossil. These stocks that just keep going up, and away without forming a base. Phillips Van Heusen is in the process of coming out of a base, still within buying range. This is another high-quality company as well. When I talk about high quality, I'm basically talking about good balance sheet, good product, good earnings and sales growth, good return on equity, generating a lot of cash. A lot to like about it. So this isn't a small company either, with a market cap of close to $5 billion. So Phillips Van Heusen having a pretty good day. Let's also take a look at Baidu, because Baidu has started to look interesting to me as well. Of course, Baidu is a China-based company that provides search services in the country. We had a huge reading in GDP growth yesterday from China. China's economy in the second quarter grew 9.5%. Baidu is an interesting company here. Actually, I have a chart of Baidu that I'll pull up real quick. We can take a look. This is a stock that is not far away from a swing point of 148.44. Great growth at Baidu. They're going to be reporting earnings soon. Earnings up 89%. From a year ago, sales up 78%. Big growth story going on here. Breakout is not out of the question with Baidu. We'll be right back, folks.
Purchase Tiger Dollars during the month of July, and you will be automatically registered to attend Tom O'Brien's one-day live webinar. 5 primary core techniques to become a master trader, and no additional charge. Your purchase of Tiger Dollars is the only way to gain access to this exclusive webinar. The one-day webinar will be held Monday, August 8th, from 8 a.m. till 3 p.m. The course will also be archived on your members page for you to view at your convenience. Go to the front page of TFNN.com under Breaking News and order your Tiger Dollars now. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you, Breakout Investing, and I've had Dominic from Arlington, Texas on the line for a little while. Dominic, I apologize for keeping you waiting there. How are you?
Hey, greetings, Ken. Wonderful. I wanted to ask you about TAOM and FIO. Both of those IPOs are having their, I guess, lockups next week. I wanted to know what's been your experience with expirations coming up for lockups on IPOs this decade. I know during the bubble, I believe you automatically sold, I guess, because that's when the insiders were unloading. But what's been your analysis of that?
Right. So I don't have in-depth analysis for you, Dominic, but I know that when a company comes public, it's usually is it 60 days or 90 days or something like that after it starts trading. The lockup period ends where insiders are allowed to sell shares. So I tend to think it's probably overrated. And again, I don't have specific data for you, but I think a lot of people get all antsy and get all worried about a lockup period ending because of the potential that insiders are gonna sell shares. But again, I don't have extensive analysis over the past 10 years as to are IPOs doomed to fail just because a lockup period ends? You know what I mean? So with TAOM, you know, I mean, I know that this is a real powerful stock. It had a great day yesterday. Probably, you know, moved on, you know, that great GDP number that came out of China yesterday, with the economy growing 9.5%. And FIO, I'm also familiar with as well. This looks like there's a very real growth story there as well. So I guess what I would say about lockup periods ending, I think probably investors pay a little too much attention to it. If you're dealing with a company with you know, a good balance sheet like a TAOM and like an FIO, I mean, these companies do have good revenue growth stories and interesting technologies. You know, I'd stick with these stocks and you know, not worry too much about the you know, the lockup period ending.
I got you, Ken. One more thing to add to that, or more or less a question. With so many Chinese companies coming forward, and the what kind of precautions would you recommend for investors? I mean, CCME had fantastic earnings, and we saw what happened with that, and then recently all these other companies. What precautions are you advising, or are you taking personally to position yourself against damage beyond a stop loss?
Well, and you're talking solely just in terms of names out of China?
You know what? Yeah, I guess it would be primarily. I mean, CCME being probably the most famous. Long Top Financial also being another growth story that has powerful earnings.
Well, I mean, I still have some names in China that I like very much. You know, CYOU, a company in the same industry group as TAOM, which basically provides online entertainment for children. TAOM, but CYOU, I mean, this is a company that is clean, good growth, has been operating for several years. No problems at all there with you know, fudgy accounting. Technically, still looks good. CYOU, and also Baidu. I mentioned Baidu earlier in the show. I mean, this is a company that I think is just high quality. There are high quality companies in China, even though the headlines have been weak. I still like certain names out there, but you really just got to stick with the strong price performers with good U.S. mutual fund sponsorship that are of course showing good earnings and sales growth in recent quarters. All right.
All right. Thank you, Ken.
All right, Dominic. Thanks for calling. Appreciate it. All right, yeah, a lot of anxiety about a lot of these China-listed stocks, but I can probably name two or three. CYOU, Baidu, two of my favorite names there. I don't own them currently, but am watching them. So, folks, I am guest hosting Tom's show tomorrow, 4 to 5 p.m. Eastern. So I'll talk to you then. Have a great afternoon, everyone.